This is part 5 of the False Breakout trading strategy video series, and indeed this is the final part. In this part I'm going to be talking through trade management, where I place my entries and stops and why, and how I target my first trouble area, or what I like to call the FLR FLS. Okay. Entries. Now entries can be in either two places: at the bar close, which is pretty obvious, i.e. after the FB has complete, or on any retrace back to the scene of the false breakout. And by the scene of the false breakout, I mean the actual swing high, swing low that price is false breaking, or the support resistance. In particular for support resistance, price does tend to retrace back to the SR before taking off if the false breakout bar has closed close to the support resistance. Okay, so if I go through a couple of examples, you can see here the false breakout, price retests the SR, actually goes beyond it but still closes back below its SR before moving downwards. See another one, price closes close to the SR, it comes down, it touches the SR before moving upwards. This one, it doesn't happen. You can see price closes a material distance away from the SR relative to the overall FB bar itself, and it doesn't come back to test the SR. Another one, this one, it pretty much does. It comes back down, if you're allowing a buffer here, it comes back down to around the SR area. This one comes back to the SR before taking off. Look at one more. Again, this one, price doesn't close that close to the SR relative to the overall FB bar, and therefore it doesn't come back, it moves straight up. Okay, so price, if it closes close to the SR or the swing low, particularly for an SR FB, it does tend to come back down to test that SR and pick up new orders before moving off again. That doesn't mean it happens all the time, but it happens more often than it doesn't. It happens more often, in my experience, more than 50% of the time. Okay, just something to remember. But simply put, the entry is on the close of the FB bar after the FB is complete, or on a retrace, or both. Okay, you can split your orders up, it's entirely up to you, but you always have to be thinking in terms of expectancy rather than win rate, which I'll come on to in a minute. If I just go back to a Pacific example, if we go back to an example like this, where we have a clear SR, it's more likely that, and we have a decent size FB and price closes very close to the SR, it is more likely that price will come back and retest this SR again before moving up. And why does this retest hold of this SR? Well, if you think about it in terms of what happens when price breaks down below this SR, okay, it's breaking demand. Okay, now in forming the FB, price is then breaking back above supply, because this demand at this SR becomes supply on the retest. Price breaks above it. Okay, so now it becomes demand again. Okay, and price often retests close demand supply zones before moving on in the breakout direction, and in this case the false breakout direction. So you normally get, on any given situation where you have a breakout, for example, and price closes just below it, price will often retest before moving away. Okay, if anyone studied breakouts in detail, you'll notice that the immediate retest is very common in breakouts, and the same theory applies to false breakouts, where price closes very close to an SR. It is essentially demand becoming supply, which is ignored in terms of price doesn't hold it as supply, then becomes demand again. Okay, that's the reason why price tends to pick up new orders, come and retest this SR when it closes close to it, informing the FB bar. Okay, so entries are pretty simple. Close of the FB bar and or a retrace. Certain situations, retrace entries are going to be more common, or a retrace is more likely to be more common, therefore we can get a discounted entry. Okay. Stops. Now, the widest stop you're ever going to have is beyond the FB bar itself. If price moves beyond that FB bar, that false breakout bar, then the setup is invalidated. Okay, because we're trading that specific false breakout bar. Okay, and that tells us the order flow should push price in our direction. If it doesn't and price comes back and makes a new lower low, for example, if we talk about a long setup, then the false breakout we're trading, i.e. the bar we're trading, has been invalidated, and therefore the overall setup is invalidated. Now it might go on and then form another false breakout, but we're not trading the area, we're trading specific bars, specific setups, okay? So the widest a stop is ever going to be placed is beyond the FB bar. Now there are occasions where I will look to tighten my stop loss, okay? Now, I don't believe in rule-based trading as the most efficient form of trading, but there are certain scenarios or certain guidelines I will use to determine whether I will place a tighter stop loss or not. But the overall consideration, the things you have to consider overall is just the bigger picture, the overall setup, weighing up the setup from an objective and logical perspective. Okay. Now, situations where I will be potentially looking for a tighter stop loss will be strong rejection bars. Okay, rejection bars that stand out, okay, that are very sizable relative to the preceding bars or the surrounding bars. I won't expect price to come all the way back down to that bar high low again. Okay, clear basing before the false breakout, particularly if it's the bars immediately preceding the FB, and a very clear SR, right, very clear and concise, has been very well respected. So if I go through some examples again of stop loss. Now you can see here the widest we're going to place a stop is above this bar high. I'd use a little bit of a buffer. Okay, it's not, again, it's not 1-2 pips in all situations. It depends on the pair, the volatility of that pair, and just what makes sense from a visual perspective. Okay, but I don't expect price to make another retest of this supply. Okay, now I'm not going to place my stop loss down here, because this is, looking at the setup overall, this is an impulsive move where we have a decent rejection from supply, but we are going against what was previously strong buying. So there's going to be a battle going on within here. So I'm not expecting a straight move down. I'm expecting a bit of a battle to resume, and therefore I'm not going to, use a stop loss right down here. We have to be thinking about, in terms of positive expectancy, what gives us the most profit over time. But on a setup like this, I'm going to be using a wider stop loss. It's either going to be above the bar high, or it's going to be somewhere in this demand. Okay, somewhere near the bar high. Okay, but it's not, I'm not going to say, okay, if it does this, I'm going to put it halfway up. If it does this, I'm going to put it above the high. It's about just considering the overall setup. This is strong buying behind here. This is a decent sized rejection from supply, but I'm not going to be using a really tight stop loss here, because I expect a bit of a battle to overcome this strong buying before price moves down. This is one of the examples where we have a very clear and concise SR, particularly over the recent history. Therefore I'd be looking for the retest entry. Price closes very close to it. This is a decent size. This is a material size rejection bar. Okay, so again, widest stop loss is going to go below here, but I'm potentially going to be looking to tighten it because I expect that retest to hold. Therefore, my stop loss is probably going to be going below the next lowest low within this area, which is this low here. This one stands out. I don't expect price to come down here because I expect this demand to hold. So therefore, if this demand is going to hold, you shouldn't really get too much follow through. So you're always going to use a little bit of a buffer and be a little bit relaxed into how tight you get it, because all we're doing is trying to increase our risk reward slightly, but we don't want to do that at the expense of a winning trade by tightening it by 1-2 pips too much. So my low is probably going to go, my stop loss is probably going to go below this low here in this scenario, because I expect this retest. I expect a retest entry here, and therefore I expect this to hold. Okay. This one, this is the rejection by itself is quite material. Okay, the false breakout isn't as large as the previous setup, but the rejection by itself is quite sizable. We've clearly consumed all the demand within here and within here. Therefore, I don't necessarily expect the retest here. Therefore, if I don't expect the retest, then if I don't expect price to move above this SR again. So I'm not expecting the retest, therefore price shouldn't move above this SR. So therefore, on this situation, my stop loss is going to be tighter than the bar high. It's going to be above this SR. Again, I'm going to use a little bit of a buffer. I'm not going to place it right on the SR. I'm going to put a little bit of a buffer just in case we do get the retest and get a little bit of an overshoot. But I don't necessarily expect the retest of this SR because of how price closed below this demand within here. This is form and supply, which is turned demand, which price broke through. Therefore, it's now potential supply. So I expect these to hold. Okay. On any retest, not necessarily this for price to get up to this SR again. So my stop loss will go somewhere along where I put this line, okay, above this SR, because as I was saying, I don't expect price to come above the previous supply. So this is supply turned demand, which price broke through. Therefore, it should act as supply again. So I'm talking about these areas within here. So I don't expect price to get above these, therefore I don't expect the retest entry. I'm not going to look for the retest entry. My entry is going to be on the bar close, and I expect all of this whole area to hold. Therefore I'm going to use a little bit of a buffer. This is what visually makes sense. You've got to add the spread on top, of course, but that's where I'm going to be putting my stop loss. This one's another example of this one is a big rejection bar. Okay, if you've got a big rejection bar like this stands out, okay? This just stands out to me as a massive false breakout. I don't expect price to come back down here. If it comes even close to coming down here, I'd be extremely shocked. Okay, I expect this SR to hold on the retest and for price to shoot up. Therefore, I would be using a tighter stop loss on this type of setup. Okay, my stop loss, I'd probably be using halfway down or slightly closer, around about, say, for example, there. Maybe a little bit lower. I want to increase my R, my risk reward, but I don't want to get a losing trade because it might overshoot slightly. So I've got to use a little bit of a buffer, use common sense a little bit there. But the important thing is I don't expect it to come close to this bar low. Now there are occasions where it will do this. It will come down there, here, and it will come back up, close back above this area. For example, it will do this. It will do that. It will come back down, close back above within the next bar, then shoot up. But the number of occasions this will happen will be extremely low relative to it just doing this. Okay, or a small overshoot. Okay, that's going to be extremely low. Okay, so this is what I mean when we talk about thinking in terms of expectancy. Expectancy is how much profit you're going to make over the long term. Okay, you have to do what maximizes your long-term profit, whereas most people, or especially in the retail or the novice type of trader, will be thinking more in terms of what gives me the highest win rate. What gives you the highest win rate, it doesn't necessarily give you the highest expectancy. Expectancy is a function of trade frequency, your average risk reward for your average winning trade, and your average risk reward for your average losing trade. Okay, so expectancy is a function of all three. Most people focus on win rate over the expense of risk reward and the expense of trade frequency. I prefer to focus on a mixture of all three, and in particular trade frequency, something I'll way beyond this video, but pertinent to this example. I want to use what will make me give me the highest expectancy or the highest net profit over, say, 100 trades, not what gives me the highest win rate, because the odd occasion that this happens, I'm happy to take a loss with the knowledge that over 100 trades, for example, i.e. a big sample, I will make more money with a tighter stop loss up here than I will with a stop loss down there. Okay, that's the bottom line. What gives me the most profit? Okay, what gives me the most profit with my stop loss placement here? If it's up here, then I'm going to do that. It means my win rate might be slightly lower. It's going to be a lot lower because expectancy is a function of win rate to an extent too. It's part of the equation, but I'm going to have my stop loss which give me the most profit, the highest profit over the long term, not the highest win rate. Okay, so this one is just an example of a big rejection bar where I don't expect price to be coming anywhere close to this, so therefore I will be using a tighter stop loss. This one is pretty much the same in terms of it's a decent sized rejection, but it's also a very clear SR, and it's also got the clear basing. Okay, I said the three scenarios I'll be looking for, where I look to tighten my stop loss, big rejection bar, very clear and concise SR, basing before the false breakout, particularly if it's on the preceding bars, the bars preceding the false breakout. This fits all three essentially. It's a decent sized false breakout. We have decent basing. And why is that basing important? Because that creates supply here. Supply, price overcomes it here, so therefore it's ignored demand. Demand that was broken equals ignored demand. Demand that is broken on the first test, is ignored demand. Therefore we expect it to become supply. That's where we get that symmetry. The symmetry of price on the retests. Therefore, I expect the retest entry here. It closes close to the SR, and I don't expect a material overshoot. So my stop loss will go somewhere, say roughly up there. Again, I'll use a little bit of a generous buffer because I don't want that little overshoot to catch me out and price move in my direction. What I want to avoid doing is having it up here, where the chance of price coming back down after it comes up here is lower than it shooting up. Okay, whereas if we get a tiny overshoot here, I don't want price to be caught out and being taken out, then price actually plays out like it does. Okay, this is another example of basing at the previous swing low. I don't expect the retest entry because price is closed materially above it, but I do expect this area to hold because I don't expect the retest entry. Therefore my stop loss is going to be placed just below this SR. Maybe a little bit too tight, a little bit more of a buffer than that, but you get the picture. It's not going to be below the swing low because of the basing. I don't expect this area to break, and I don't actually expect the retest entry because price is closed materially above the previous swing low. This is a material false. I would class this as a material false breakout. It's very sizable. Now this is one where I would potentially expect a retest entry, but what I wouldn't like is a lack of symmetry here. I would prefer this bar to be testing that swing low rather than being a small false breakout. This is a small false breakout which failed. I wouldn't be trading this, it's too small. But I would prefer price hitting this former swing low area, confirming it is demand, therefore it's overcome a supply, ignored supply, becomes demand again, therefore I'd expect the retest entry, but you can see it actually shoots lower. But this is what I'd be using for my stop loss. I would be looking for a retest entry or a discounted entry if possible, but then if I come back to that, my stop loss would be just below this bar. A little bit of a buffer again, but I don't expect price to come below here because this is demand turn supply, which is ignored, and it should act as demand again if price comes down here. And you can always zoom in, you'll see it much more clearer, the overall picture down here on a lower time frame than you will on the time frame you're trading. But in terms of looking for the retest entry here, I have to ask myself, where's the biggest retest I'm going to look for? It's back at that former swing low. Okay, it's back at this area here. Now if I look at the distance between here and here, that is tiny. Okay, I'm not going to forsake a potential trade by looking for a couple of pips or whatever that is there. Okay, it's tiny relative to the overall move. My target's going to be up here, which I'll come on to exit at the moment. So my risk reward from the close to there with the stop loss below here is what, above 2. I'm not going to forsake a trade for the sake of getting, say, a 2.5R out of it. You have to, again, be logical and objective. Don't use your common sense. Okay, I might split my orders, I might try and scale in, but I'm not going to miss out on a trade for the sake of a few pips on that retrace. Okay, you have to weigh up the pros and cons of each setup. Do you expect the retrace? Yes. Maybe split your orders or scale in. If you don't expect the retrace, then it tells you where you can put your stop loss because you're not expecting that retrace to occur. Therefore, you can use the SR and the swing, or for example, in this one, this previous bar low for your stop loss placement. So sometimes it's better to focus on tightening your stop loss than looking for the best entry and missing out, okay? This one, very sizable rejection, completely stands out. It's come from demand. I'm not expecting price to come back down. If price starts coming back down quickly down here, then that says to me that this is most likely demand consumption and price is going to continue lower. Okay, so this is an example of a big rejection bar. My stop loss is going to be placed below this swing low, but I'm going to lower a bit of a buffer. This pair looks a little bit volatile. You know, this move down is quite volatile. Quite big momentum in the previous swing low. It looks quite volatile. It might be a metal, I don't know. Well, checking up on it, but I'd use a stop loss around there. Okay, a buffer below that swing low. Again, I don't want it to overshoot slightly and miss out on the whole trade. So it's not about being too greedy, but it's still a materially smaller stop loss than below here. You know, it's cut in half. So I've doubled my risk reward on any exit because I've halved my stop loss. Last example. This is a big rejection bar. Okay, it's a big rejection bar, and as I spoke on the previous video, we've had a false break of this swing, but we've also had a false breakout of this kind of zone or SR zone along here. So this is supply turn demand, which was ignored. Therefore, I'd expect this to hold. This is pretty obviously clear supply. So I wouldn't expect a material overshoot of this area here. I'd expect this to hold. Okay, so this is about considering, this is one of the examples of just considering the overall setup from an objective and logical perspective. I don't expect this supply to be broken. My stop loss is going to go a little bit above these bars, maybe a bit lower than this, plus spread, okay, because I don't expect price to come back up here above these former bar highs, which should add a supply now on any retest. Do I expect a retest entry? No, because prices close materially below the scene of this false breakout. Okay, and that also tells me that if I don't expect the retest, why would my stop loss be above here? Okay, if the retest would surprise me, why is my stop loss all the way up here? Okay, I would always look to reduce my stop loss rather than looking for a slightly better entry on the the retracement entry. If it's 2-3 pips, I'm looking at that, looking at where my exit will be. So for example, my exit on this one might be down here, and my entries on the bar close here. Looking at that distance relative to this distance on stop loss, am I gonna try and get a retrace entry? Not this is not one I expect a retrace entry, but you've got to look at the overall risk reward, the overall picture, and say, is it worth trying to get the extra 2-3 pips when I'm looking at a 2R winner, potential winner anyway, and I might increase it to 2.3, 2.4R. It's not worth missing out on a trade for the sake of an extra 0.4, 0.5R. That's where using your brain, using your common sense comes into it. Okay, I'm much more likely to try and tighten my stop loss. This increases my R much more than looking for a retrace entry does. Okay, and it ensures I'm not missing out on the setup, but I'm just being logical with where I expect price to hold on any retest. Okay, so they are the three main scenarios I'll look for, where I'll look for a tighter stop loss: strong rejection bars, clear basing before the false breakout, particularly if it's on the bars immediately preceding the FB, and a very clear and concise SR that's been well respected. They are the three common scenarios where I would potentially looking for a tighter stop loss. But as I've been over and tried to get across, it's all about being objective and logical, considering the setup as a whole. Not looking for a series of rules, just looking at that setup and consider its own merits. Okay, what that tells you in terms of what should hold on any retest. Do you expect the retest? Okay, and as I've been over in terms of retracements, yes, there are occasions where I expect a retracement, but you have to weigh up. You have to use your common sense in terms of don't go missing a trade because you're looking for a 2-pip, which will make let's say a 0.4, 0.5R difference to your result. It's better to have that lower, that 0.4, 0.5R lower result than miss out on a whole trade, isn't it? Okay. And also been over expectancy. Okay. It's a separate topic in its own right, but you've got to have that right mindset, thinking in terms of, if I traded this 100 times, where should I place my entry and stop loss that will give me the highest net profit. Okay, that's the kind of right mindset you should be giving, not, or where do I place my stop so it gives me the highest win rate. The highest win rate will often not give you the highest net profit or the highest expectancy over time. Okay, for price action trading like this, you need to be thinking of where do I place my stop, where am I most likely wrong, what do I expect to hold, okay, where am I likely to be wrong. Okay, the ultimate is above the bar, high bar, low, but is there a reason why I expect it not to get that high? Can I place a tighter stop loss? Will that give me a higher expectancy over the long run? Okay, and that's where confidence comes in. To trade like that, you have to have confidence. People that don't have confidence focus on win rate. Okay. Lastly, exits. Exits are pretty straightforward. I'm not going to how do I look for a runner trade. That's a complete separate subject. Trade management is a complete separate subject in its own right in terms of what type of price action do I use to judge whether I'm going to look for a bigger runner. That's not the topic of this. This is just how do I pick my first trouble area. Okay, what I call my FLR, FLS, first line of resistance, first line of support. Okay, and it's merely just supply, demand, support, resistance that could cause price to reverse. Okay. Now, aside from that, there's also a price action reason to potentially enter a trader, exit a trade earlier, and that's because we know how price should behave. Okay, a false breakout is all about order flow, which should generate good momentum. Okay, if price starts stalling and going sideways for a number of bars, for me, that's a reason to cut or reduce my exposure. I'm unlikely to reduce all of my exposure on a trade. That's the way I look at it. But if we don't have that good momentum, and I don't mean price taking off within seconds, got to use your common sense. Consider the pair. If it's dollar CAD, for example, that's a choppy sideways moving pair relative to, say, Aussie yen. Okay, got to look at the pair, look at the time frame of trading, look at surrounding price action. How does price generally move? But if it's going sideways where you don't expect it to, that's a potential reason that suggests that maybe the order flow that you want present in the false breakout isn't present, and therefore it's time to reduce my exposure. Okay, I know how price should move on the pair I'm trading, on the setup I'm trading. If it materially doesn't, then I'm going to start reducing my exposure and we cut my trade in half. Okay, but it doesn't mean, like I said, if it doesn't move within 10 seconds, 5 minutes on an hour, 1 hour base setup, you start cutting your trade. That's just stupid. Okay. Another price action reason will be obviously if price starts moving back below the SR or the swing low that was seen in the false breakout, and that suggests the order flow is completely gone and that area is not being respected, and prices now it's more like a 50-50 trade. So if I go over the same examples, where do I expect? Now, if I was marking up potential trouble areas, I would look at these areas, and then I would look at it like that, and then obviously down here. Now, this is not going to be my FLS. Why? Because it's very close to the false breakout. False breakout suggests is a strong order flow based trading strategy. Okay. Therefore, if it's this close, I don't expect price to hit this and get reversed again. I expect the order flow generated from this false breakout to be stronger than the demand sitting here. Now, it doesn't mean I'm going to let price necessarily do this. Okay. Or maybe if it starts consolidating along here, doesn't mean I'm just gonna sit and do nothing if it does that, but it means I'm looking for a bigger move here. So unless I get price action to tell me otherwise, I'm not going to be taking any profit off here. I'm going to be watching this area. We had strong buying up here, so therefore this is definitely demand, but I'm expecting the strong rejection from supply, i.e. strong selling, to overcome this demand, overcome this strong buying, and the order flow generated from the false breakout itself to be stronger than any demand decision here. But if we get strong rejection from here, or we get price just moving sideways aimlessly for a period of time, I'm going to be looking to reduce my exposure because it's not behaving how I expect it to behave. I expect maybe a small consolidation, a small drop-based drop, supply demand zone to form, and for price to shoot down. Okay. So this is where I will be looking next. We've got demand, supply, but it's not being respected up here at all. I would probably zoom in to a smaller time frame just to see if it gives me any more information. But on this time frame, it looks like price didn't respect it on the way up and didn't respect it on the way down. Okay, If it hasn't respected this, then this area is of no importance anymore. Okay, but I would zoom in 1 time frame or 2 time frames just to get more information. I've said it before, and people that know me well know that I look at time frames as just sources of information. I zoom in to find information. Okay, this is just one bullish bar. You zoom in a couple of time frames and you'll see more information than this one bar will tell you, because you'll see the breakdown of how price moved in forming this bar. So I want to see whether this was respected in any way, shape or form. I'm not looking for a one, if this is a H1 based seller, I'm not looking for a 1 minute stall here, for example, that's just illogical. But I'm just seeing did this area respect price at all? If this is H1, I'll be looking at M30 and maybe M15. I just want to see if it did materially respect price. If it didn't, then this area of no importance to me, because it should be respected in price here. And the fact it didn't tells me that this area has no importance in shaping how price moves anymore. So therefore, the next area, which did shape price most recently, had a supply pause, come back down, breakout, come back down, especially on this retest, immediate retest. This did hold price. Okay, so this would be my next area, and you can see this is where price came to. So I'd be watching this area. I may or may not be watching this area depending on what the lower time frame told me, but then I'd be looking to go down here. And how would I manage my trade? Well, once we've broken this area, I'd be moving my stop loss down to above this area, and I'd be potentially tightening it as we move down. I don't use trading stop losses, but I'm not, for example, going to watch price do this, come back down, come back up and take me out. Okay, because that's too much odds to give away for the sake of it hitting your FLS and coming back, taking you out. Okay, now if this area was lower down here, then I'd leave my stop loss up there. But the fact that this is a material distance in terms of it's a material risk reward effect, I'm going to be trading my stop loss and having my finger on the exit button as soon as it comes back down here, as soon as it gets close to this area down here. I'm not going to exit up here, for example, but once price starts getting close, I'm going to be moving my stop loss down to protect myself against a sudden reversal and giving way, 2R, 1, 2R. Okay. Next example. It's pretty straightforward on this one. You see this whole supply area within here, this is where I'm going to be targeting, the supply area within this SR here. We have supply up here. This is one where I'll be watching. I normally have like 1 or 2 zones where I'm watching where, if price starts reversing hard on me, I'm going to be looking to reduce my exposure, or if price hits this area, for example, up here, I'm going to be tightening my stop loss. Okay, my stop loss is going to be moving up below any support, resistance, supply, demand that I expect to hold in any retest. So for example, if you look along here, you can see supply, demand, supply. So once the price gets above here, up here like this, my stop loss is going to start being moved below this area, because I want this to hold in any retest, especially when it's very close to my FLR. Okay, there's nothing logical in giving away 2-3R for the sake of another 0.23R. Okay, so once price gets above here, this is going to be my target. My stop loss is going to be moved from, remember it was below here, to below this area up here. Okay, if you look at how prices move, strong buying, therefore I don't expect a strong retrace. If it does, that tells me something's wrong. So my stop loss is going to be moved from below here to up here once price breaks this area. Okay, strong buying. I want this area to hold in a retrace. I've got to give a bit of room because it's not that concise, and my exit is going to be within this supply, within this SR. Okay. Next one. Well, this is the standout area down here, all this demand within here, and this is a case of price coming very close. I mean, I'd be zooming in to refine what demand I expect to hold, what demand hasn't been tested in here, but simply put, if price comes this close, starts reversing, I'm not going to wait. This is an example of not letting this happen. Not letting that happen, and your stop loss still being above it. That's just illogical. It comes within, say a couple of pips or whatever it is on this pair, this time scale, this scale, but it comes extremely close. Now, you could easily argue, why isn't this the FLS? Well, it is supply. It's a little bit of supply here, but there's nothing here that tells me that this is a strong area. It's only this area here, so it's not, doesn't strike me as a strong area that should reverse price. It does reverse price, but we don't even retest that SR again before dropping again. So I would be looking at the demand within here, and I'd be looking to refine my exit to based on zooming in and finding the demand within here. And I'd be again move my stop loss down once this area is broken. My stop loss would be moved above this area, okay, to protect myself against sudden reversals like what happened. Okay. This one's pretty straightforward. Just this range. And just go straight to it. Okay. This one, again, straightforward. You could look at this and say, well, what about this area within here, or this area down here? Let me redraw those. Say this SR with this along here, and there's also obviously some sort of SR along here, depending on how you draw it. You have to refine it slightly, it's not easy to see. That one's too close, as I spoke about. This one's too close. This one, it wasn't respected. Like I said before, it wasn't respected recently. I'd zoom in a little bit to make sure it's not just being hidden by these moves. But this one's a standout area. Demand within here, and the SR along here. Okay. And again, once price starts getting below this area, I'll start trading, move my stop loss above there. It starts getting below this area, I'll move my stop loss to above this, to above here. Okay. This one, you've got the supply zone within here. Now this is one where price takes a long time to get to it, and it misses it. I've been refining it. I've been zooming in to refine this because it's just not very clear on this time frame. It's not clear enough. So you can see price gets close to it before coming all the way back down. I can't see obviously on this time frame whether the price hit that before coming back down or went down before moving up. But this is one where I'd either would have got stopped out on a trade on a revised stop loss if it came down before hitting my target profit, or I'd be out down here somewhere. Once it started, once it starts getting above this area, my stop loss is going to be pretty tight below here, pretty tight below there, to protect myself against it coming back down and then shooting back down. Okay, so I'd be refining my target profit, but it would be within the supply within this area here. But I might potentially miss out on this, depending on what happened first, whether it hit this area or whether it hit this area. Okay, can't tell on this time frame. This is probably what I'm about to say is beyond the scope of what I've discussed so far in detail, but this is compression. This whole area here is a compression channel, so I expect price to get up here. Okay, compression is just price being squeezed with no untested supply within this channel, or this area doesn't have to be a channel, but you can see where's the untested supply, there is none. Okay, it's just consolidating, moving back and forth as it moves down, testing each supply on the way down, being squeezed. Therefore I expect price to move up to here, and again you can see I'll be refining it. It will be the supply within this channel, this area here, which it hits. And again, once we break above this area, my stop loss will be moving below here. Okay. This one's a little bit trickier. I look at this and I say, well, I can't see anything stopping price within here. Okay, the only area is, nope, that's all right, is any kind of supply left within here. These are reactions to supply within here. So this is the area I'd be looking as my FLR. But of course, you know, my entry is on the bar close down here, and I said my stop loss is it's below this swing low with a bit of a buffer, so I've got very tight stops. So price comes up here, you know, I'm talking about 3, you know, this is what, 4 to 5 hour up here, so price comes up here within this area, for example along there, my stop loss is going to be starting to, you know, get trailed below this supply. As it gets higher and higher, it's going to start, my stop loss is going to get tighter below every broken area, because I want to, you know, this looks like a volatile pair. You can see the number of whipsaws, or the wicks on bars tells me the volatility of this pair. So I want to, you know, you've got to protect yourself against price coming up here then coming back down. You know, that's 3R. You don't want to give away 3R on any kind of setup, especially on these setups where you're not necessarily looking, well, I'm looking at it at the moment, well, I explain at the moment, you're not exactly looking for big runners in terms of days and days, holding an hour base setup for days and days. You're talking about the initial momentum from the order flow behind the false breakout. Okay, trading that, and explicitly that. Okay. Last one, which I think I mentioned earlier anyway. It's pretty straightforward. There's anything in the way really, there's nothing there that stands out. This one here, and it has a retracement after testing any remaining demand in here, but you know, until it gets, you know, entries here, then I said my stop loss is going to be above these bar highs with a buffer plus stop loss plus spread, so it will be slightly higher than that. But you know, I'm not, until price gets down here, testing maybe this form of supply within here, I'm not going to start tightening my stop loss. You know, this is my ultimate target down here, so there's nothing here to suggest that price should get held up by anything else. Okay, and that is it. So I've been through all the basics of my trade management, how I look at these types of setups from a basic point of view in terms of how I look for entries, the retrace potential, where situations where we expect potential retrace entries, but looking at the overall picture in terms of, is getting that retrace entry worth it? Don't, you know, maybe split your orders, don't put your eggs in one basket, don't miss out on a trade for the sake of 0.2, 0.3R. It's more important to focus on a stop loss. I've been through the common 3 scenarios where I'll be looking to tighten my stop loss, i.e. not have it above the bar high, the FB bar high low, but it's important to consider the setup as a whole and be thinking in terms of expectancy. If I trade this 100 times, what would make me the most money? That's one basic way of looking at it in terms of your mindset approach. Don't think about win rate, have confidence in how you trade. Okay, and exits again, identifying the FLR, FLS. Remember that the order flow generated from an FB should be quite strong, so it should be strong enough to overcome any close, okay, supply demand support resistance. We should always be finding, you know, 1 to 3R on FB setups, in my opinion, on the straightforward ones like the ones I've been over, and the way I trade them in according to this video series. But don't be stupid, don't be illogical, use your common sense, don't give away a 3R winner for the sake of, you know, if your target profit is 3.2R, don't let price come 3R to it and then reverse on you and take a loss or take a break even. Okay, I don't move my stop loss to break even that often. I'm moving beyond supply demand zones on the way that price I expect to hold on any retest. That's the way I look at it. I trail my stop loss below supply demand support resistance areas en route that I expect to hold on any retest. Okay, that immediate retest I expect to hold. Okay.